you're getting ready to retire. You can feel it. You got all this paperwork coming in from your employer. You get a big old stack of papers and take a look at it. It's your pension. How are you going to choose it? You going to take a single life pension or a joint life pension? There's pros and cons to both. Today we're going to go over the topic. I'm going to explain to you how to make that decision. So today we're going to answer 3 things briefly in the video. The first one, what are the pension options? The second one, how do they work? And the third one, I'm going to give you a real world example of how to kind of figure this thing out, how to look at it when you're reviewing your own pension options. So stick around to the end. There will be some math, but it'll be worth it. So generally speaking, when it comes to pensions, you're going to have 2 general options. One is going to be single life only. That's for as long as you're around, you're going to get the pension check. The other is going to be some form of a joint life benefit or a survivor benefit. Different pensions call them different things. Single life pension option works just like it sounds. If you file your paperwork, you retire, everything is good. You take your first pension check to the bank, you deposit the thing, you're walking out, and you get run over by a bus. Man, the video just took a dark turn, but stay with me here. You get run over by a bus. You had a single life pension option. Life is over. The pension is over. There's nothing left for anybody else. You got one pension check. That's not a very good deal. Now, conversely, if you live 40 years in retirement, you're going to get a lot of pension checks. And the single life pension check is typically going to be the largest benefit. It's going to be the largest amount because essentially the insurance company that's backing the employer's pension, they're only insuring for one lifetime, for your lifetime. And so whether you're the person that gets run over by the bus early or the person that lives 40 years, they can figure out what the appropriate amount is. And because there's only one life involved there, tends to be the largest payment option. Let's look at that same sad example again, but with a joint life pension, with a survivor benefit. Let's say there was a 100% survivor benefit. And so you and maybe your wife went to the bank and you deposit that first check and you're feeling good. And the bus got you, but it didn't get her. Maybe she was a couple of steps behind you. Pension's still coming, all right? I know that's kind of a goofy example, but that's realistic. If something happens and you pass away early in your retirement, and this is key, we're gonna come back to it in step number 3. If something happens to you that you pass away early in retirement, the joint benefit is typically gonna win, assuming that your spouse lives a good, long, normal life. One last thing to consider about joint pension options. Sometimes it can be based off of your spouse's age. The amount that they'll pay you will be based off of the spouse's age. This can be particularly impactful if your spouse is quite a bit younger than you. And so if that's going to impact the amount of the survivor benefit, that might also then impact your decision as you're making it, because if your single life pension option is substantially higher than your joint life pension option, it's going to make that one much more powerful when we look at the math. So in the real world example, there are 3 major factors that you need to consider when you're looking at your own pension. The first one is longevity. Now, I know nobody's got a crystal ball. Nobody knows how long they're going to live, but you know, have you been very healthy throughout your life? Does longevity run in the family? Is Aunt Gert still kicking around at age 98? If longevity's on your side, that might mean you err on the side of the single life pension. Contrast to that is if longevity is not on your side and you are married and maybe your spouse has great longevity, that might lend a little more credence to looking at a joint option. So longevity is the first thing to consider. The second thing to consider, cash flow. What are you going to have coming in retirement? As you know from my videos, I always talk about guaranteed sources of retirement income. A pension qualifies as that. It's a check that's going to come every month. And so what do you have coming in every month? What will you have going out? And what's your pile of money look like? That's basic retirement planning 101. So what's coming in every month? Well, if you need the larger pension option just to meet the bills and you don't have much of a pile of money put away, you might not have another choice. Now that's certainly rolling the dice because you're hoping that you live a good long life if you select that higher pay single life option. But if you need it from a cash flow standpoint, you might have to do it. The third thing that you need to consider is the math. And when I say the math, what I mean is this. Each pension for each individual person, the numbers are different. And so if your single life option is double what the joint life option is, that's a huge spread. Normally they're not that far apart. That would lend itself to say, well, the single life option might work better for me in my specific scenario. If they're very similar options and it's just a little bit lower, chances are good you might be better off with the survivor benefit option. The caveat here is We can never know the actual answer to this without the benefit of a time machine. And if you had a time machine, that'd just be a waste of a time machine to go out there and figure that out. You could do a lot better things with a time machine than figure out what your pension election should be. You can do this math for yourself. What's your single life benefit? What's your joint life benefit? And start multiplying it out. How long do I have to live to get a certain dollar amount out from the pension system? And then go back to our three-pronged test. What's longevity look like? What's cash flow look like in your specific circumstance? And what's the math look like from your particular pension? If you do that, you can probably come to a pretty good conclusion. If you have questions about this sort of thing, you want some help with your own specific pension, by all means, as you can see, I do this thing for a living. Drop me a line, shoot me an email. I'll be happy to review yours with you and point you in the right direction. I hope that you learned something, and I'll see you soon.